What's up, YouTube? CFX here, back with another video. And today we're about to go over, finding entries, knowing what's a good trade and what's not a good trade, stuff like that. And I believe, so market structure and what's really a good trade, you know what I'm saying? And in the last video, I really went over that as well, like, break and retest. You guys know that that's part of my favorite thing to trade. But let me show you guys the results of trading a break and retest from just this week. So I just released the video like those, how many days ago? Let me see. I think it was like 4 or 5 days ago, talking about break and retest. And then we had a trade this week. So yeah, 6 days ago actually. And then we just had a trade this week that was a great example of that. So only trade that I took this week was gold. I wanted to take USD CAD, but it did not do what I wanted it to do. So we're going to see what they do. But gold was the next best setup that I had this week, trading it off of a break and retest. And here we had the market break the downtrend, right? It broke the downtrend, came back and retested this support right here. Boom, sold down, right? We had that. But what I was looking for this week was the break and retest of this downtrend that just happened. So let's go over market structure, right? Let's go over simple market structure. So I'm gonna remark everything back up just to show you guys how I went through it, my thought process and everything. So we just got the market breaking this uptrend, right? The market broke this uptrend and then continued to sell down all the way to this point right here, right? This point right here where this black line is. So what I ended up doing was looking at my structure zone. So my support and resistance, my trends, things like that. So here, what I already can see is the market created a resistance right here, which was my lower high, right? This was my previous lower high at this point right here. So the market was creating lower highs right here, from here to here, and then from here to here, right? So I can basically say that this is a zone. This is my previous lower high, correct? So what we will be looking for in order for the market to reverse is that the market have to break this level right here. I'll set a horizontal ray. So the market has to break above this high right here in order for us to be like, okay, the market has now created a higher high, right? Right here where this red line is. So that's what we're looking for the market to break. Let's go forward and then boom. The market has now created a higher high right here, just slightly above their previous high. Now we can now say this is officially a higher high, right? Because the market has continued to go up and it's even created a minor uptrend right here. Just a minor uptrend right there, right? So in this case right here, the market just created a higher high and it just broke this level. So what I would be looking for is the market to come back and retest this level right here and then continue up, right? A simple break and retest. Trading structure, we would be looking for the break and retest of this area of resistance that it just broke, right? So let's continue to trade it. And now this minor uptrend that the market just broke, you could about trade this sell right here if you really wanted to. But how that sell would look is this would be your entry. So the market just broke this uptrend, came back and retested the trend, boom. When it come back and retest that trend and you see that it rejects off of the trend, this could be your trade right here. Now, I just said that I'm looking for the market to come back and retest the level that it just broke, right? Which is right here. So I really wouldn't set my TP or anything lower than this level right here because it just broke past this level and I'm looking for the retest. So why would I set my TP, you know, all the way down here? Just to show you guys, like I wouldn't set my TP all the way down here because I'm not trading off of this level right here. I'm trading off of the break and retest of my previous high that it just broke, which is here. So I would set my TP to that level if I was trading this minor sell right here. But we just got that break right there. And now we're finally at the retest, right? We're finally at this retest. But in the process of going down to this retest, we also have a downtrend right here. We also have a downtrend right here, right? So
it's so in a downtrend, it's bouncing off the MA and
Forex. MA right here, right?
And what other confirmation you say?
So for this sale.
Yeah.
Yep. So for the sale, it had broke this uptrend right here, this minor uptrend. And the reason I keep on saying minor because we are in minor structure right now. We have to understand that we are in minor structure. So it broke this minor uptrend right here. It tested the MA. And also when it broke this minor uptrend, it came back and retested the uptrend and rejected off of it. So when we get that candlestick rejection off of the retest, then we pretty much know, okay, this is a valid retest and the market may continue to sell down. And our second confirmation for that retest to make it valid was to break and retest of our previous low. And it came back and retested it right here. So let me get rid of this. So let's say you did catch this entry up here. You could have caught this entry down here because it also broke this level of support that has now become a resistance, right? And also at this level of the support that has come a resistance, it is a retest of our point C for this downtrend right here. So we got point A to point B, making this a valid downtrend now. And then point C right here. Or if you don't count this as point B, this will be your point B right here. Either way, you have now confirmed a downtrend and a continuation of this downtrend because we just got the break of this support, also the break of this uptrend, and it has come back and retested both the uptrend right here, and then it retested the break of the support that has now become a resistance right here, and we got a candlestick rejection, leading us to this confirmation of the sale. Do all that make sense?
Yeah.
All right, bet. So if you didn't get the entry up here, you could have grabbed the entry right here as well. And then the way that your trade would be set up for that would be right outside of structure, just a little bit. And then your TP still to the same point, right at the retest. And you still catching 1,000 or 225 pips, but 1,976 points from this gold trade right here.
So like when you get in, like, do you go down to like a smaller, like, you know, time frame, like, you know, when you get in like for your trade?
Yeah.
Or do you like stay on the?
Yep, we go in on a smaller time frame. Depending on what type of trader you are, but it's always good to enter on a smaller time frame. And the reason that's why is because you see things happen much quicker. You know what I'm saying? You see things happen much quicker. Now, it's still good to know where you are in the market on like larger time frames, like on a 4 hour and a 1 hour, you want to always understand where you are in the market. And the reason that's to why is because you can get faked out on the smaller time frames if you are not paying attention to where you are in the market. And what I mean by that is, so we know that we are in a downtrend right here, but if I go down to the 15-minute, what it looks like is the market just broke out of consolidation from here to here. It looked like the market just broke out of consolidation and it created a higher high on a 15-minute time frame. So to people, they may be like trying to take this buy signal right here since the market just created a higher high, and they think, okay, it's probably going to come back and retest this level and then continue up. But in actuality, if we go down or go up to the larger time frames, we see that this is just a retest of the downtrend right here. This is just testing the downtrend. So this small buy in this small candlestick right here was only leading up to the retest of this downtrend right here. So yes, choose your entries on smaller time frames, but make sure they line up with the overall movement of the trade if you are trying to trade the overall movement. Now, yes, once it broke out of this level right here, you could have traded the this small buy right here. You could have traded this small buy. But like I said, understand where you are in the market. You can trade in the opposite direction of the market, but understand where you are in the market. You know what I'm saying? So like, although we're in this downtrend right here, we do see small opportunities of the buy. You know what I'm saying? We see a opportunity right here. Once we get that retest, you could have entered on this candlestick right here, the bullish candlestick after we see the wick rejection. But understand that the market is going to come back in and fill in this wick. So you could have hopped in right there. We talked about this very small buy once it broke out of consolidation. You know, taking the small profits, nothing is wrong with that at all. That's pretty much about it that I see about trading in the opposite direction. But I don't really like to trade in the opposite direction of what I'm looking for or opposite direction of the trend. I like to trade with the trend, having my confirmation of where the market is going to go, where it's headed, and things like that. But can you trade against the trend? Yes, but understand what you are doing, understand your entry, and understand that there's nothing to hold for long term. You know what I'm saying? Like, it's easier to do on major structure. And what I mean by that is, like, if I go to the daily, you know what I'm saying? If I was to go to the daily chart and see different moves of the market, you know what I'm saying? Like this, the market was in a huge downtrend, right? It was in a huge downtrend. But we see little buys that's leading up to the retest of the downtrend. That's what I mean by trading against the trend. We know the overall movement of the market is going down, but you can capitalize on these buys that are leading up to the retest of a trend or a structure level. Do that make sense?
Yeah.
So yeah, even when you're choosing your entry on smaller time frames, just be careful and understand what you're looking at and where you are in the market, and understand what you are getting in for. So we just talked about, you know, taking this sell right here, leading back down to the retest, and let's play it forward a little bit more. So understand that this right here is just a simple break and retest, right? This is just a simple break and retest. So the market just broke the previous high right here after the downtrend, and then it went on a minor uptrend. And now that it just broke this high right here, we're looking for a retest of this level of structure. And we're looking for the resistance to become a support, just to catch you guys up on what we are looking at, right? Now, in the process of that retest of our previous high, we got a downtrend. We ended up getting a downtrend in the process of that retest. And now we're waiting for the break of this downtrend, right? We needed to break this downtrend to confirm that the market is ready to buy up. And another thing as well that made this retest valid is when the market is coming down to retest and you see a wick rejection like this, or you see the market go into consolidation like this, that lets you know that the market is respecting this level. Now, when you see a wick rejection like this, some things to look out for is for the market to come back and fill in that area, basically fill in this wick with full candlesticks like we see here. So we see a long wick, and here we see long candles. This is what I mean by filling in this candlestick or filling in this wick with candles. So understand that that does happen for the most part or majority of the time. But like I was saying, what makes a valid retest is either momentum slowing down, which is what we see here. Momentum was slowing down on this sale and the market entered consolidation, and also strong wick rejection, which is what we see here.
So when they in consolidation, like they'll let you know like that it's going up, like the market about to go up, or
not always. So when the market enters consolidation, what you want to look
just
for,
like for right here.
Yeah. So what you want to look for when the market enters consolidation is that you want to see a break out of consolidation. You want to wait for the market to give you a direction, right? So here we got the market just going side to side right here. But we knew that the market was about to buy up when it broke out of this consolidation zone. Yep. When it broke out of this consolidation zone and went up. So now we know the direction that the market wants to move in, right? It broke out of consolidation. And what direction did it break out of consolidation in? It broke out going up. Same thing here. The market broke out of consolidation here and went up, but it only went up to retest this downtrend. So here, when it broke out and went up, we're not really around a strong level of structure that should push this down for right now. Maybe for a minor turn or a minor sale, which is the break and retest of this support becoming a resistance right here, but it's nothing just to send the trade all the way down. We're not going to look for a strong rejection until we get back up to this downtrend right here. Why? Because this is the level of structure that is influencing the market right now. It's our downtrend, right? So like I was saying, that break and retest, it sent the market back down, but it did not send it down for a long term. Like I was saying, this is not anything that is going to influence the market for like a long-term trade. This is very short term. It may send the market down for a little bit, which it did. So what I mean by the break and retest is the break and retest of this support right here, our previous low, and the retest right here, our support becoming a resistance. It sent the market down a little bit, but I want you to pay attention to what is going on right here. So it rejected, right? The market rejected, but what the market failed to do was create a lower low. The market failed to create a lower low. Instead, it created a higher low from here to here. So that is another sign that we got that the market is ready to buy up. You know what I'm saying? It's about to go up a little bit more. It's not ready to sell all the way back down yet. So let's continue to follow along with the market. And then boom. We get the break of this downtrend right here. We get the break of this downtrend. So now that we have the break of the downtrend, right, it just broke structure. So what are we looking for?
A sale.
Nah,
Wait, it broke down going going up.
yep. So
So
it
it's
just
gonna be a
broke out
buy.
downtrend. Yep, it's going to be a buy instead. So we just broke structure. So now we want to look for a buy signal. But what we want to look for a buy signal on a break and
Retest.
yep. So we're looking for the retest. So it's either about to come back and retest here, or it could come back and retest this trend right here. Now, let's play it forward and see how it goes. And then boom, come back and retest the trend, and then it buys up. But also what made this very strong was it retested not only the trend, but it also retested our resistance that has now become a support. It retested the previous high that it just broke, and it bought up some more. So this was a cool little buy signal right here. Trading off with a retest, we see that rejection. That is this buy signal right here. We set our stop.
So you won't get like faked out. Like, would you need like a I think you said something about a second candlestick or something
Yeah.
like it's confirmed.
So a 2 candlestick confirmation is usually what I go by. And what I mean by that is you either when you get when you're nearing a retest, you either want to see momentum slowing down or you want to see a wick rejection. So like here, how we got the wick rejection right here, and then a bullish candlestick. That is exactly what you would like to see when the market is nearing your structure that you are trading off of. And then here we momentum didn't quite slow down. Let me look on the 1 hour. But if we look on the 1 hour, what do we see? We see a wick rejection and then bullish candlestick right here. All right. So, but we looked on a 15-minute. We see this bullish candlestick that took up half of the previous bearish candlestick. So that is something that, you know, we can take note of as well, that our bullish candlestick came back and filled in half of our candlestick before that was in the opposite direction. And then here we get a very, very, very small candle right here. So once you see that, you pretty much know, okay, sellers are, it looks like sellers are losing control of this market and it could push up, right? It could push up. But if you want to be on the safe side, you could have waited for the end of this candle and caught the rest of these pips right up here.
All right.
That would look like this. And at that point, you're trading about to a 1-to-1 ratio. But either way, it hits TP. And that is a good amount of pips right here. Great amount of pips. So either way, if you were going off candlestick confirmation, you could have chose this entry right here and you would have had minimum drawdown, like very minimum drawdown. And then I think the market, consolidated for a little bit. And then it came back down to this level. And then here, it looks like the market is getting ready to sell down, right? Looks like the market is about to get ready to sell down. Let's go to the 1 hour. And let me show you what that looked like. So in the 15-minute, right, it looks like the market is about to get ready to go on a major sell. But in all actuality, what do we see here? We see a double wick rejection right here, which is at this level of structure or this level of support right here. So we got that break. And that's what sent the market going back up for the rest of the week. But again, we see a break right here. So at the end of this wick, and then I already got this zone marked up. Spread it out a little bit. The market had a small level consolidation right here, but not really small. It went on for about hours. Actually from 8 o'clock all the way to the next day, the market was basically in consolidation for a whole day right here. And then once it broke out, it came back and retested with that wick. And then boom, your entry is, once you see that wick rejection, you could have either entered right here, or once you saw that it came back down again, could have entered right there. Let's say you did enter up here, all you would do is just maximize profits once you see that second wick rejection. And then that's your trade right there. So does that make sense? Like on knowing when to enter for the market, really just entering on a break and retest. And once you get your candlestick confirmation and other things to line up, then that's even better.
Yeah. So like, where you put like so like it like, do it matter like where you put like your stop loss and like your take profit? Like, is it like a certain?
And now,
like where you put it?
Now your take profit can vary. You know, it can vary from the ratio that you are wanting to trade at, or if you're trading off of structure. So if you're trading to, let's say, the previous high, you know, if the market was getting ready to reverse, or obviously like if the market is about to get ready to reverse, you can base your trade that is probably going to set a higher high, and that's when your ratio will come in, or your Fibonacci level. You can set your trade based off of your fib levels, which I have in the course on how I got it set up. It's in the advanced folder under Powerhouse Strategy. And also you can set your stop loss based off of structure as well. Now, your stop loss won't really vary. You know what I'm saying? Not for me, at least. I always set my stop loss based off of structure, right outside of my previous structure that I'm trading. So here, like here, I'm trading based off of the previous high that it just broke. So I set my stop loss right outside of my resistance that has now become a support. I set it right outside of here. Same thing in this scenario. I set my stop loss right outside of here because it just broke this high right here. This is my resistance that has now become a support, and I set my stop loss right outside of structure. Or if I'm trading off of the trend line, it's the same principle. I set it a little bit below the trend line. You know what I'm saying? Now, in some cases, setting it outside of structure can doesn't mean that your stop loss won't get hit. But a common mistake that a lot of people make is that they believe that because their stop loss got hit, their trade is no longer valid, which is not true. The market can hit your stop loss, but still go in your direction. So let's say I set my stop loss a little bit up some, and it ended up hitting or getting hit because of the market wicked out. If the market wicks out at your stop loss, but never closes outside of structure, and what I mean by that is a candlestick close. So because of my candlesticks closed all the way up here, but the market wicked out down here, my buy is still valid. Now, if I had got a full candlestick that closed like back inside of here, then, you know, I may need to second guess or think about that buy. So your TP Or your stop loss can be set either based off of ratios, but I always like to have my stop loss set off of or based on the level of structure that I'm trading. So right outside of structure, and like let's go over this sale again, just to show an example of a sale. So I took this sale right here, right? I would set my stop loss right outside of the trend line. Is right outside of the trend line, and my TP was on the retest of the level of structure that it just broke. So, does that make sense?
Yeah.
All right. And then, like I said, you would set your TP to either the previous level of structure, like the previous high or the previous low, based on what you're trading, or if you could have like a set in amount of pips that you're wanting to catch. So like, let's say you're only looking for 50 pips, you know, your TP is always going to be set to 50 pips, or your TP2 is 75 pips, you know, you can have that set to 75 pips, however many pips, or based off of your entry, however many pips it is from your entry, or whatever the distance is from your entry that will give you 75 pips, to make that make sense.
All right. And one other thing is I about to ask, so when you on the MetaTrader app and like you putting in your take profit and your TP, like how you know, like, you know, the number like you supposed to put,
so
like
you
do it like you like line up, like, you know, with like go over a little bit.
Come out here.
Yeah, you know, like where it's got all the numbers at.
Yeah, so I always, like Trading View, it will always line up on Trading View, or you can get your numbers from Trading View. So like for this trade, for example, I'm looking, I would just line my mouse up with where my stop loss ends at, and there'll be 1922.311. That is what my stop loss will be on MetaTrader. And then my TP, I would just come up here, line it up, or line my mouse up with where the end of my TP is, which is where the end of that green zone is, and that will be 1966.041.
You move it over a little bit some more.
Huh?
Like so I can see the number. I see, can you move it over a little bit some more so I can like see the number? Like is it gonna pop up right there?
Yeah, it's this black line over here, or that. Let's see. So you see this right here?
Yeah, I see it.
In black. That's basically where the end of my green zone is. And then that was my TP.
I had my phone zoomed in so I can see it. I had to zoom off. I was zoomed all the way in on that jump.
You good?
I had to zoom back out to see it. That was my fault.
No, you good. And then at the end of this black line right here, I got 1922. And then that's how I would get my stop loss in my TP. So I set my stop loss in my TP on Trading View first, just to map it out, see how it would look, and see how many pips it would be. And then I go on to MetaTrader, and that's when I actually enter it in.
All right, a bit. Yeah, I see.
Yeah, but that's pretty much it on trading based off of structure and knowing when to enter a trade. Like when, well, it's about all the summer this week. So we had a total of, or you could have taken a total of 3 trades this week, just based off of these right here. I only took one because I was only looking for the buy off of the break and retest. Here. Even though it did go a little lower, I ended up getting stopped out. But once I saw this happen here, then you could have, that's when you could have re-entered and then just remade or made back what you lost when your trade hit stop loss right here. That's how you adjust. That's how you make back what you lost wait for another trade opportunity. Don't get greedy, or don't get emotional, all because your trade hit stop loss. Wait for another opportunity and get a chance to make it back. That's a question, or did that answer all your questions that you had?
Yeah, I was trying to think of something else that I had, but I can't really think of right now. But yeah, that's it.
All right, bet. Well, that will be the end of the call.